Hello everyone guys, this is your host and host Ashok Kumar here, and I welcome everyone to this Basics of our Stock Market for Beginners session 3, and we will be having lots of information in today's session. And let's just deep dive into the basics of stock market, and today I will scratch on the surface of the technical analysis. So let's jump in. Head on introduction to the learning of basics of stock market. This is where you'll be learning lots of stock market basics. And if this is your first session, just go back and watch the first session and the second session. You can click on the links in the description below and you will get all the information which is required for the basics of the stock market. And this is the session 3. And if you have not subscribed, just go ahead, subscribe. Come on, subscribe first and then click the bell button. I hope you have subscribed, and don't forget to click the like button and comment your thoughts about this video. Alright, let's jump into the contents. What are available in today's session? We'll touch base on the basics of stock market for beginners session 3, where we will be learning about what is a primary market and how does the primary market function, what are the types of primary market issuances, benefits of primary markets and disadvantages of the primary market, what is the process for applying for an IPO in the primary market, and what is the secondary market. You probably know about primary and secondary market. We'll just deep dive into that. And what is the process of trading or investing in the secondary market, what is technical analysis, what tools would you require for trading with the technical analysis as an indicator. Let's jump in guys. So let's look at the basic definitions of the stock markets. So what are primary markets? As you already know, primary market is the place where you will actually go to buy the new shares which are actually being given to the public, right? The primary market is where the securities or stocks or shares are created so they can be sold to the investors for the first time. Okay, so the publics can invest in that particular company through an IPO only. And what is an IPO? It's an initial public offering where the primary market issues new shares of certain companies whichever want to be listed on the stock exchange, and they can only give their shares through the initial public offer through the primary markets. That's an IPO. And secondary market basically means there are stock exchanges. There are 2 stock exchanges in India. So that's the BSE and the NSE. So let's jump in to more information. Technical analysis, pictorial representation to evaluate investments and identify trading opportunities with price trends and pattern charts. So yes, of course, you will have lots of information about technical analysis. This is just the short information which I have given, right? What are the technical analysis tools you would require to trade in the markets? So they are trading account, something like a trading view or trade station, and you would of course need the stock charts, and you need a trading account first of all. And stock charts are the charts which you can use the trading view or trade station, and trading account is the brokerage account which you open with the brokerage, stock brokerages or discount brokerages. Knowledge of pattern recognition. So of course you would require the knowledge if you even have 2000 rupees notes falling on the floor. However, you don't know that it is a 2000 rupees notes. It actually has no value. You will just throw it away and just go away from there. So knowledge is very important. However, knowledge is queen and action is king. If you have not subscribed to this channel Exotic Investment, go ahead and subscribe right now. So The technical analysis and the primary and secondary markets are mostly what we will be dealing in today's session. What is primary market? Raise capital for expansion. The companies can raise capital for expansion through the IPO, and that is possible only with the primary markets. So the only way the companies can go public to the secondary market, that is where the stock exchanges are, and that's only way is IPO, and the IPO is available only in the primary markets. So the companies can raise funds and then go to the primary market and pledge the company shares and raise capital for their further expansion through the primary markets. So primary market is the whole and sole route for the company to go public. As I already mentioned, LIC of India went public with a whopping valuation of $56 billion. Yeah, of course. So the greatest company which India has probably ever seen is LIC. How does primary market function? So a company wants to list their stocks, they come to the primary market, and there are companies which comes in, and there are underwriters and there are investors. So how does the primary market function? The functioning of the primary markets involves three entities. They are the company, the underwriter, and the investor. So the company is the one who wants to be listed as a company in the secondary market. There are companies which actually wants to be listed, and those are the companies which will give the IPO, so which will go through the IPO to raise the capital for their company. And there will be underwriters who actually are the evaluators of the company, if the company can be listed and in the particular band of the price whatever they actually have. And there are investors. And steps of functionaries are: companies will issue for the first time, the underwriting company determines the selling price of the new security issue, and the investors are the buyers who are looking for investment in the IPO. So examples of primary market papers are bonds. Very recently IIFL came up with a bond, and bills of exchanges, government bonds, corporate bonds, and stock of companies. All of them are coming out through the primary markets itself. The types of primary market issuances are public issue to public through IPO, and private placement. This is for people or the companies who actually wants to raise capital through the private investors, like angel investors. They want to give away a certain set of their company, a certain part of their stocks are given away to the investors so that they can raise the capital. And preferential issue means preferred investors who get the dividends before the individual investors. Rights and bonus issue: a company can give away bonuses to the investors, and company can give the rights for their company's mergers and acquisitions. Rights is they can ask for rights to be voted for the particular company's mergers and acquisitions or anything at all. And there is bonuses which can be given to the public or to the investors who have invested in the company. When there is mergers or when there is lots of profits in the company, the bonus will be given. Bonus shares will be given to the public. And qualified institutional placements. These are the companies which are actually determined by SEBI to invest in particular companies. They are the big institutions who have lots of money to invest in the QIPs. So they are qualified institutional buyers, can purchase QIP as approved by SEBI. So SEBI has a list of QIB QIBs who can only invest in QIPs, that is the qualified institutional placement, to raise capital for the company. And a way for companies to raise more capital is by QIBs who are participating in the buying of QIP. If you have any questions or suggestions about this video, please comment in the description below and I will try to improve it as much as possible. Benefits of primary markets: and companies can raise funds at a relatively lower cost. Yes, of course. So companies can raise funds at relatively low cost, compared to the angel investors, because angel investors look for a great exit and they want bigger payouts. However, primary markets are investors who really want to have profits. However, they don't have a certain set of percentage which they are actually looking for. So primary markets is the easiest and the lower cost way to raise capital for the company. Primary markets are an essential source for mobilizing savings in the economy. Yes, of course, more shares actually come into the stock market, more money comes into the stock market, and more people who are actually buying the IPOs, right? So that's more money coming into the market, then the economy grows at a faster pace as well. It is not affected by market fluctuations. So the market actually comes at a particular band from probably 500 rupees till the 800 rupees. So within that particular range, that particular stock is actually given for bidding process. So in that range only, the market will actually be buying the IPOs of the public offerings. The stock price is determined before the IPO. Yes, of course, there is a set of band, as I already mentioned, right? So 500 rupees to 516 rupees, of 480 rupees to 560 rupees, 500 rupees to 800 rupees. Within that particular band, the SEBI actually gives approval for particular company to be listed in the primary market. So what are the disadvantages of primary market? No historical trading data, as we already know. Any company wants to be listed, they will only be listed through primary market. So no historical data is available for evaluating if the company is good or bad. And varying degrees of risk can't be determined as the historical data is unavailable, as I already mentioned. In some cases, it may not be cheap for an individual investor, like Paytm, where it was listed somewhere around 2,200 rupees and now it is around 500 or 470 rupees. So that's like really bad for an investor, right? So it's possible that the higher the price, and after listing it may go really low, so the losses may be higher. Individual investors will not receive the stock incentives if the stock is oversubscribed. So this is first come first serve basis, right? IPO is first come first serve. So once people actually cling in at that particular block or band, there are different bands. So under that particular band, if people did not get the share, it means that it is oversubscribed in that particular band. So they have to bid in a different block, and if that block is also oversubscribed, they will still not get the IPO stocks allocated to the demat account. So what is the process of applying for an IPO? You must first have a trading and a demat account. A trading account and demat usually goes hand in hand. Usually when you are opening a account with a brokerage, they will have the trading and demat account opened. However, trading account is the front end where you will be actually buying from the secondary markets, and the demat account is like a back end where you will have all your shares stored in the demat account. if you want to apply for an IPO, you should buy from the trading account and then keep it in the demat account. And demat account creates a back-end account where your shares will be stored, and that will be completely digital. There is no physicality of shares now. You would need to apply for an IPO via the brokerage firm, and there is lot of form filling to be done. Every IPO shares are allotted a lot size by the SEBI. For example, if Nifty has a lot size of 50, probably Paytm may have a lot size of around 150 or 200, right? You at least have to buy one lot. So one lot is probably 150 shares multiplied by 500 will be your cost to buy that IPO. And more in the next slide. IPO application is called as the bidding process, guys. This is where the juice of the information is. You will have to bid for the particular IPO which you want to buy at. So there will be, as I already mentioned, there will be slots for each and every bidding slots. And for example, if it is listed within the band of 480 rupees to 560 rupees, 480 to 500, 500 to 520, 520 to 540, 540 to 560. There will be different bands available where you have to bid, and this is first come first served. So as and when people actually cling in to the IPOs and they actually put in the money, accordingly it will be allocated to the people, and set of shares is allotted at one price. As I already mentioned, you have to put the price at which you want to bid at. Next group of investors are allocated with the IPO shares at an increased price. Once the 480 rupees band actually stops, then 500 rupees band actually comes up. Allotment of the IPO is first come first serve basis, as I already mentioned. It's possible that you applied for an IPO and you did not get it because that particular band is already gone and you are not the first in the group to get that. So IPO shares are allotted within 10 days of the last bidding date. Knowledge has power. It controls access and opportunities and the advancement. So what is secondary market, guys? This is where you will actually be trading. The secondary market is nothing but the stock exchanges where you will buy the shares of the companies. NSE and BSE are the secondary markets. Secondary markets in stock market terms mean it's the place where the shares are allotted by IPO, are available for trading and investing for the public. However, secondary market is the place where you can buy and sell the shares of the companies which are already listed in the IPO and has come to the share trading platform. In the secondary market, you do not have to be allotted shares. You can just buy and sell the shares right away. In the secondary market, you do not have to be allotted shares via the IPO route. You can just buy and sell any shares you want. You may choose any shares of the companies and start to trade or invest. Yes, of course, you can. Your whims and fancies can go wild with the secondary markets. Basically, every trading account is currently online and you have the convenience to trade from home. Yeah, what is the process of trading or investing in the secondary market? Just that you have to have a trading account. You can read through everything. However, I'll just give you the summary of it. Just have to have a trading account where you will actually put in the money and you will start trading or buying the shares or selling the shares, anything. You can sell the shares without even having the shares you have already bought. You can just sell it right away, right? Trading account gives access to buy and sell of shares without holding, as I already mentioned. To invest in stocks, you need both trading and demat account. As I already mentioned, the stocks can be bought in the front end through the software, and it has to be stored in the back end where it is stored in the Demat account in the digital form. Demat account is the back end where you store the shares. Then you need the trading software provided by the brokerage where you can buy and sell the stocks. So this is the next deep dive, which is technical analysis. I see technical analysis as my God. That's the guru and God. It has actually given me the freedom to travel the world and have my food when I actually wanted to. My definition of technical analysis, this is only my definition and not which is given on Google or any websites. Technical analysis is the pictorial representation of predicting what happens in the future by analyzing what has happened in the past. Technical analysis is the time machine that actually runs to the future, have you at a 30,000 foot view of the market and return to the present to give you the glimpse of what happens in the future. So that's called as astrology, probably, right? Where you can actually go to the future and predict what happens and come back to the present. Technical analysis is also like that. Technical analysis relies on indicators to make sense of the trend and buying or selling in the market. So what are the tools required for technical analysis? Technical analysis software like TradingView or TradeStation, and knowledge of candlesticks, knowledge of price patterns, knowledge of indicators, and knowledge of chart patterns. All these information are required to trade in with technical analysis in the secondary markets. That's the requirement, and in the next session we will actually look into deeper dive into the technical analysis. If you want to get rich, invest in index funds for a long time. That's what Mr. Warren Buffett, who was the richest person in the world, has mentioned. That being said, if you have any questions at all, I'm open. Please put it in the comments below. And how did you feel this session was? If the recording is good or the live session is good, whatever you want, I'll do the same thing on Saturday. And if you require any information at all, please put it in the comment, or if you have any feedback, please put it in the comment as well. And next session, technical analysis deep dive, as I already mentioned, where we will actually say basics of stock market book is available on the Kindle. This is my written book, The Basics of Stock Market for Beginners, edition 2. This is a big book, almost about 170 pages, and you will get to read lots of basics of stock market if at all you require. This is available on Amazon. Go ahead and check it out if you want to. And if you want to contact me, exoticinvestment.com or ashok.rao@exoticinvestment.com. Anything is okay. That being said, this is saying namaste from Ashok Kumar. This is your host and host Ashok Kumar here, and let's say goodbye and namaste to everyone, and happy trading and happy money making, guys. Take care.